In our view, ESG is going to be one of the most significant drivers of returns over the next decade at least. And that I think comes in two aspects. I guess there's a risk aspect of it where avoiding companies with poor ESG is going to be really, really critical. And I think there's probably two aspects again to that, which is one is there's a sort of a hygiene factor, sort of companies operating well, and there's, I guess, that underlying social license to operate. I think if you look back in the recent past, Activision Blizzard is an example of a company. Perhaps it's got on the wrong side of that more recently. I think it started about 6 months ago when the CEO was awarded a $150 million pay package, which is quite generous, and obviously that raised questions for us. And then more recently, there's been sort of various harassment issues around the labour force, et cetera, and you've seen the stock underperform very significantly. I think it's off about 25% this year. So clearly, I think you underestimate those risks at your peril. I think the other aspect is just unsustainable businesses, which is, I guess, the most topical at the moment is fossil fuels. And I think the way we like to think about fossil fuels and oil prices is, if you think about a ping pong ball sort of bouncing down the stairs as being the oil price, and it has those periodic periods of strength, which is seeing one now, but we know the end destination is the bottom of the stairs, and these are stranded assets of probably with a zero value, and if not a negative value. So I think avoiding those is going to be really critical. But I think what is really exciting about ESG investing is the positive aspect, really, is just finding those companies that are leaning forward and trying to do something sustainable and really innovating and driving the changes that we're looking to see in society. And as you know, we've got two strategies at Alphinity that really seek to do exactly this, the sustainable strategies. And whether that's in renewable energy, electric vehicles, et cetera. So there's some really, really exciting things happening at the moment, and there's sort of trillions of dollars. I mean, if you've been watching the COP26 news over the last several weeks, there's lots of really large figures, but the range is very between sort of 2 trillion and 6 trillion per annum that needs to be spent to sort of transition the economy. So that presents really exciting opportunities. Yeah, great question. I think the one that I'd call out probably from our perspective that's really impressed us is a company called Schneider Electric, French-based. It's a multinational company. It's a very large, diversified manufacturer and distributor of electrical products, which doesn't sound that exciting, but when you think about their markets being EV charging, the transition of the grid into sort of smart grid, distributed storage, and they've got a really innovative EcoStruxure platform which they've developed, which sort of leans into the Internet of Things, sensors, cloud-based, and comes with a very, very exciting sort of a value-add proposition in terms of that they claim that this can cut carbon emissions by sort of 50%. It can cut maintenance costs by as much as 75%. But I think beyond that, we sort of really like the sort of operational ESG aspect. So one thing I'd call out is, this is fairly unique as a company where they've got 58,000 of their employees, which is about 40% of their workforce, actually on a incentive scheme which has explicit KPIs around ESG, which are disclosed and measured every quarter and drives as much as 20% of your remuneration or your incentive remuneration. So, we think that's really strongly aligned with shareholders and really driving that change. So that's one company I think we're very impressed with. It's relatively rare. It's something that's very topical and probably is the start of every conversation we have with a company, and many companies are in various stages of looking at this, and in our experience where companies have introduced it, it's generally at that top exec level. It's very rare that you see that permeating right down, and it's clearly something that we really look for, because I think we're all sort of aware of the sort of dangers of greenwashing or even green wishing, where people sort of tell a great story, but it's not really embedded in the culture. So that's probably the first question we ask in terms of just how ESG looks in terms of a corporate governance, and to the extent that it's actually driving incentives for employees. It's really critical. Generally speaking, the European companies are doing it are best in our experience. So I think in my area, the companies like Partners Group, which is a private equity business, alternative capital business, Swiss-based. Clearly, the asset management industry and financials generally have not done a great job at ESG and sustainability investing, but that's not that they can't. I think there's a tremendous opportunity in terms of allocating capital and really sort of driving that change. And that's one company that we've been very impressed with. They're taking that very seriously, and particularly in that sort of private market, which sort of that unlisted capacity where they're taking long-term positions on companies. They've got the ability to impact outcomes through being on the board, actually participating in management. And again, that's sort of really working really well. And then on the negative side, and again, I sort of probably caveat this with, this is an active discussion and debate that we're having, but clearly at this point in time, we think Facebook or Meta platforms, as it's recently been renamed, is one that's perhaps on the wrong side of a lot of these debates. And I think that goes from various issues in terms of corporate governance. It's one of the few large tech companies that still has a sort of joint chairman CEO in terms of Mark Zuckerberg, but obviously has also been associated with various different controversies in terms of misinformation, product safety and health in terms of Instagram and sort of mental health issues and data privacy. So I think that's probably one that we think has got work to do, and we're fairly cautious about at the moment.